Jitendra Sriram as well joins in to talk about his thoughts on the markets. Jitendra, thanks so much for patiently waiting by. I had to address the currency. But really, your word on the rupee, because whatever the RBI seems to be doing seems to be, falling flat, not just for the currencies, thereby the equity markets as well.
Well, I think part of it has got to do with what is the tool you're using to fight what menace. To a large degree, I would agree with some of the earlier speakers on your show that, the efficacy of monetary policy to address structural problems on current account deficit and fiscal deficit is basically the critical issue. And I think it is a very limited tool. I mean, if you were to take a look at current account deficit, what you potentially need to do is probably, we have had some self-inflicted wounds. We have banned iron ore exports. There have been issues there. We're losing $10 billion of FX every year there. Those sort of things need to be addressed. Secondly, you need to also address stuff like, whether how well we can try and attract foreign debt flows into India, because that's where the bulk of the redemptions have taken place. So I think a lot of it has got to do with probably fiscal tools or policy making to address this rather than trying to use monetary tools. And I don't think, one should at all target a level of a rupee given the kind of, import cover that we are currently running at close to 6-7 months. I don't think it is a desired outcome. So apart from curbing excess volatility, I think RBI is doing probably the right thing in terms of not trying to defend a level, but probably just trying to curb the volatility.
Okay, now let me just mark HCL Tech and Bharti, and thank God some logic is there today. Bharti has recovered from the day's low. HCL Technologies has also reversed from the day's low. This is pure number reaction. When we started the trade at 9:15, both these stocks had come down because of rupee. Jitendra, but I hate to say that the landscape is getting from bad to worse. Rupee is under pressure, flows are patchy, earnings have not bottomed out, so all the hopes of economic revival are getting dashed, and the Nifty is still at about 5,700. So do you think we could be staring at some more downside and significant downside from current levels given the kind of macros and numbers we are working with?
Short term, probably, I mean, it is a possibility. I don't rule it out. But the fact is, I would say that if I look at from a market top-down view, I would say that, expectations are now a lot more realistic. Take a look at currency, where we were 3-4 months back at 54, 55. Now, at least the currency has gone to a level where a lot of people are saying, okay, now at least it's a kind of a two-way trade. I still agree it's vulnerable, but it's still a two-way trade at this point. Number two, you have a situation where growth has now got a lot more anticipated, at least compared to what a lot of people were mouthing in terms of above 6% growth or some kind of hopes of those growth. Now at least RBI itself has cut down growth to about 5.5%. So to that extent, I think a lot more realism is coming towards the growth aspect as well. Thirdly, even in terms of monetary easing expectations, if I look at the beginning of the year, people were anticipating something like about 125-150 basis points of easing through the year. That has actually got far more realistic now. And I would say that if I look at earnings breakdown for India vis-a-vis Asia, I think Indian earnings are looking a lot more realistic. Market is not extrapolating a huge big number. We are still talking of 10 to 11%, which I think is a doable ask. You have very resilient pockets, whether it's consumer staples, whether it's IT, whether it's healthcare, maybe exporting sectors, some part of the defensive pack. But the fact is these are the large constituents in the index and they are fairly more realistic. So I don't think you have too much of, thing to worry from a corporate earnings perspective. I think we are still in some kind of bottoming out phase. Yes, it may take 1 or 2 more quarters to get there, but I would not be so worried on that. And also put it in a regional context. Everything is slowing. You have, for example, I mean, from our own house call, from a global context, I would say from a global strategy perspective, we are underweight Brazil, Russia, and China. Where does that leave a BRIC investor with? It's a question that from a relative perspective, being in India, we obviously feel negative, but the fact is everywhere else things are falling.
Okay. Let me just mark rupee. Now, rupee has stabilized and newswires are reporting the Reserve Bank of India has intervened. They've sold dollars. So if this dollar supply from RBI increases, that really will stem the rupee. Where is rupee right now? That's the flash on your screen which captures the RBI action. Of course, this is all source based here. Rupee is at 6.14. So the RBI action clearly is getting absorbed. The trade is so weak and the trade is so pronounced that short sellers are clearly selling rupee down, irrespective of the price action, irrespective of what they're hearing from the regulator. Jitendra, there is an old maximum Wall Street that never fight the Fed, but looks like everyone is in the mood to fight RBI. They're not scared of RBI.
Well, I don't think it is a viable option in a sense. In end of the day, it's not a convertible currency we are talking about. So there is a lot of restrictions still there. But see, India's problems are well known. In a sense, you have a huge current account deficit which needs to be financed, and there is a temporary blip in capital flows. So to that extent, I do agree that fundamentally things are weaker. And to top it, we have done various self-inflicted wounds. Banning iron ore and stuff which I already spoke about. So those are issues that we have already, whatever was getting exported out of the country, we have actually damaged those as well. So I think to some degree, we need to set those right to make sure that our external imbalances are much more reasonable than what it is today. And, things could also be considered where you could look at tinkering of some import duties on consumption items, high-end luxury goods and so on, to make sure that, there is some tempering of demand on the import side as well.
So, Jitendra, what's the way to go forward? And do you think we will be able to defend the last time low of 5550, 5500 thereabouts, or there is a chance that the Nifty may even breach that?
Well, I doubt that scenario because, I think in a relative context, we are not as badly placed from a regional perspective or from a global perspective. Yes, there is a global, do put it in context that two of the largest equity markets in the world, US and Japan, are both seeing increased interest. So there is a money flow towards DM over the emerging market world. So to that extent, these two large markets are sucking away some part of global liquidity. But having said that, within the EM context, I would still say India is not as bad as it appears for somebody inside. If I look at it from an outside perspective, I would still say India has some reasonable thing in a sense that there is some growing polarization in corporate India. You have about 15 odd names which probably are trading at lifetime highs, whereas you have about 30 odd stocks in Nifty which are probably reflecting a 4,000 to 4,500 Nifty.
Jitendra, very quickly, what is the near-term future for companies like Bharti, Tata Steel, Hindalco, companies which are sitting on a large dollar-denominated, debt? When they took the debt on the balance sheet, rupee was at 41, 42. Now rupee is at 60. So suddenly the cost of servicing the debt will be mounting.
Yeah, short term, obviously it is a headwind in a sense. I would expect that you should see earnings revisions downwards because of the dollar rupee movement. And just to put it in context, for example, telecom services overall for the index as a whole, that's one where I see the maximum aggressive forecast. Market is forecasting like a 60% EPS growth into FY14 over FY13. I seriously think that is a big ask. I agree on all the parameters you laid out earlier that RPMs are improving, user tariffs locally are improving, but the fact is dollar liability is quite prevalent on the sector, and that will impact in terms of adverse movement. It also brings forth the question, how successful have Indian corporates in buying overseas assets? The fact is that on rupee cost of capital, when you're trying to buy overseas assets, it has not been a very pleasant experience for most of corporate India. I would say the successes are few and far between. The ones that are bombed are probably far more in number to count.